Hey guys, Boris from BK Forex Advisor. Good to be with you for another week of trading in the currency markets. As always, I'm going to start with my disclaimer. Please note the following video is for educational purposes only. No claim is made as to the efficacy or efficacy of any trading strategies contained in this video, and as always, do your own research. So let's start this week, lesson number 8 of our Scalping University series, with what I consider to be one of the more interesting and certainly the method that I like to use the most when I try to scalp the currency market. I'm calling this lesson basically how to scalp fundamentally, but it really involves both fundamentals and technicals when we get into the setup in more detail. So the bottom line is that when you look at FX on a short-term basis, essentially all FX moves are either news or price-driven. What I mean by that is that there's a piece of information that comes out that usually drives the currency markets one way, or a certain level is tripped, and that in turn creates price movement by itself. Now the thing is that, at least for me, and I think for most people, news-driven price reactions, which occur nearly every single day, can be understood logically. It's typically prescribed. You know the calendar, you know the fundamentals, you know the event that's coming up, and therefore you can understand the underlying movement a lot better when it's put within a news context. Price-driven reactions can be driven by a whole host of things. There could be a big exporter order. There could be an M&A order. There could simply be a spec guy who's trying to push levels to one direction or the other direction. And when you're trying to sort of trade on a purely price-driven flow, you are at an informational price disadvantage. On a news flow, everybody in the market knows the news information, and therefore your ability to analyze and react to it is essentially on a level playing field. On a price-driven flow, it isn't, because you're not privy to the bank flow information. And I think in that way, that's the reason why I kind of like the news flow model a little bit better. So in order to understand it in much more detail and to make it a viable trading setup, we have to understand the key aspects of how to scalp fundamentally. The first and foremost is you need to know the intensity of the news. That is the variance from perception. Typically, the bigger the surprise, and again, this is typically, never, ever, ever is it always. It's just probabilistically more so than not. The bigger the surprise, the stronger the opportunity. That means if the market is expecting 1% and it comes out at 5%, it's clearly a bullish piece of fundamental news, and it tends to have more intensity on the price flow. Number two, you have to really appreciate and understand the freshness of the news. And I'm going to show you a couple of examples where it works and it doesn't. The general idea here is basically the newer the story, the stronger the move. The less the story has been in the marketplace, the less most of the other market players have had a chance to react to it. So if you're coming to something that is already 5-6 hours old, you're pretty much coming in many ways too late, especially on a short-term basis. My rule of thumb is basically the news story has half hour to 60 minutes to maximum 90 minutes worth of news flow information before everybody who's on a short-term basis and an intermediate-term basis gets a chance to kind of react to it. Past that, the market kind of gets a blank memory swipe, and it looks at other things beyond it. Lastly, you need to understand how the news is acting within the broader context of the risk-on, risk-off environment. Is the market positive risk today, and is the news positive risk? In this case, that usually tends to have more probability of momentum than if you have, very often you will have sometimes negative microeconomic news, but overall market is just generally bullish, and it will not have an impact on your trade, as I will show you in a few minutes. So it's very important to have all of these three things aligned. The news must be intense, it must be relatively fresh, and ideally it should be aligned with the risk-on, risk-off environment of the market. And then how do we trade it? Well, I apply the exact same model that I apply for my technical trading to my news flow trading. In other words, I'm simply looking to have news flow drive my underlying OO momentum model. So if I have news information and prices moving to the downside, I'm hoping to sell 25s and target the OOs and buy the 75s and target the OOs on the upside, basically on the assumption that the positive news will drive market participants, both fundamental and technical, towards the key OO levels to be able to take those things out. So I want to join the flow in both cases if I have the right idea. The one twist is that, of course, you generally want to look at this stuff on the majors, but very often you will not get the opportunity exactly off the news to trade the majors, and you will often have a lot of really critical opportunity to trade the crosses. So before we get to the crosses, let me show you the standard classic. Where's my thing here? Oh, tell me I have everything prepared, and I can't find it now. Oh, I have it. Hold on a second. Okay, so the standard classic euro-dollar trade. Let's go back. Okay, so this is yesterday, Thursday. Eurozone trade balance comes out better than expected. Risk flow is positive, and the euro is within my striking reach of the 3100. So on the move up, this is the Eurozone trade balance comes out at 5. This is a 15-minute chart. So it really kind of just jumps up and down, and then eventually it runs through the 75 barrier. I get long on the momentum move, and it takes actually quite a while for the trade to kind of gather momentum and run the 3100. But this is a classic trade because if you notice, very little retrace. You're basically taking the 75s, it bounces back up 5, 6, 7 points against you, and then it finally takes you up and gives you 25 points of clear, clean trades on the euro dollar. That's a classic news flow, run the numbers trade. I kind of started with the best on the first. Now, the interesting thing is, as the day develops, around 8 o'clock in the morning, we get the information. Oh, no. I'm sorry. You know what? Okay, let me come back to the European news. I'm absolutely wrong. Okay, I gave you the trade balance as a trigger. That really wasn't a trigger. I was absolutely wrong. Trade balance did come out at the same time, but the trigger was the Spanish bond auction, which really was a much more important trigger. The Spanish bond auction went off really well. That created, this was the Spanish bond auction reaction, the initial reaction, and then the digestion of the news, and then of course the move to the 3100. So pardon my mistake. It was not a piece of economic calendar news, but it was a piece of very strong fundamental news that came across the wires, and that is exactly what I was trading. Okay, so now let's go back, because this economic news comes in, or this fundamental news comes in, very importantly, into the Euro-Swiss trade only 2 hours after that. 2 hours after that, the S&P comes out and says that they're not going to even consider raising rates. They keep the rates at 25 basis points. They're not even consider raising rates for a long time coming. And more importantly, they downgrade their inflationary expectations, which is a very, very dovish statement. All of this within the context of very positive Eurozone action. Now remember, Euro-Swiss has been battered over and over and over again on the assumption that European sovereign debt is going to go bankrupt. So yesterday we have all this dynamic where suddenly the European sovereign debt is not going bankrupt, and more importantly, the S&P isn't even going to support the Swiss franc. So that's monstrously bullish for Euro-Swiss, and I instantaneously get long. As a matter of fact, as you can see, my confidence level in this is so strong that I actually get double long on the run to the 3200s, and of course because this is news flow, you don't get the perfect fills. I simply went in market here, and the fills were actually a little bit higher than the 75s because I was reacting just a tad bit late. But nevertheless, it broke through the 3200, made my targets. And here, as you can see, it continues because the momentum is becoming so strong that I feel it's worthy enough. At this point, I'm actually only taking one unit because my confidence level is not as strong to the 3200 that they're going to run the 3300. I've actually front run this thing. I basically get long in the 50s to 75s because, again, you have to be very flexible within your structure. But ultimately, if you had gotten 75s to 3300, you would have made the move too. But here is a perfect example of where massive vortex of fundamental news really helps you drive the flow to the upside. Now, come to today. We start the day with very positive risk flow, and the Euro-Swiss continues to move up in the early European session. But European data now starts to kind of weaken into the European session. The PPI numbers are kind of soft. There really isn't anything great on the calendar to make you want to get long bullish euros. And I'm thinking they're not going to run the 3400. So in this particular case, I'm actually getting negative in front of the number because I don't think they're going to run the 3400. This is sort of a variance on the trade. And lo and behold, I actually am right. Then something unusual happens. I'm starting to see that the price action actually gets very, very negative. And this is where it's very important to understand what's going on, because I don't get involved in this price action until the news finally leaks out that, hey, Ireland may be on the verge of going to the IMF, and so is Portugal. The exact reverse of the dynamics of yesterday. again, utterly negative for the Euro Swiss. And at this point, I actually think, oh my God, so this is very, very powerful news. And I definitely want to join the move back to the 3,200, which I do over here, and I hit the 3,200 on the downside. But only after I'm able to absorb the news. Now, had I been privy to this news earlier, I would have been able to hit the 3,300, but I wasn't. At this point, the news was powerful enough, the momentum was powerful enough that I was able to take advantage of the reverse momentum to the downside. So this is how you're using the structure of the setup to make money both to the upside and to the downside. Now, this all looks brilliant, but let me show you the stupidity of some of my setups, because I think it's really important to learn what I say, not what I do. Because as usual, not everything is perfect in life. This is Kiwi Yen today, right? After University of Michigan sentiment survey comes out, incredibly weak. 66. 66 is essentially recessionary numbers. It almost always signals recession when consumer sentiment is that weak. So this leads me to really believe that negative risk aversion flows are going to accelerate into the U.S. market. And post the number, I get short around 25, 22, 23, looking for the Kiwi Yen to run to 6,200, right? Well, lo and behold, look what happens. The equity market doesn't care. It doesn't care what I think. It doesn't care what the fundamental news is. It is holding up risk. And because it was holding up risk and because dollar yen was holding up, the trade wasn't working out. So I get stopped out about an hour later, right? Now remember what I told you about freshness of the news. Once the news is 30 to 60 minutes gone, it is wasted. It is like bad sushi. It is useless to you in the setup. But if you get hung up on the fundamentals, which is a critical mistake that I make that I wish you do not make, you will then fight the tape and say, I don't care, I still think it's a risk aversion trade, I still think the market is going to close down to the lows on Friday afternoon, I'm still going to go short this thing on the second run. And what happens to you is that obviously you get stopped out twice, which is an unfortunate situation of you fighting the tape. So the net takeaway from all of this is the setup works great when it works on the first time. It does not work if you try to press it. And that is my final lesson to you, that when you want to scalp fundamentally, you want to scalp with a flow on the first time basis. If it doesn't work, walk away. There are plenty of opportunities. As I always say, do as I say, not as I do. Learn from my mistakes. This is Boris Schlossberg, wishing you the best of luck and the best of trading. Those of you who are not members of BK Forex Advisor, I really wish you guys would give us a chance this month. We're running a special where we're discounting the service, and we're going to be doing private webinar scalping and short-term trading webinars, both Kathy and I. Kathy almost never does these things for anybody who joins us. So anybody who wants to join us, please go to bkforexadvisor.com and do so. Wishing you the best of luck and the best of trading. This is Boris Schlossberg. Over and out.